Well, good evening, everyone. Welcome. Thank you for joining. This is MEFA's webinar, College Financing for Families of High School Juniors. So I'll introduce myself and then I'll have you maybe write in the question and answer section a little note about what you're hoping to learn tonight so I can make sure to answer your questions. I'm Julie Shields-Rutina, and I am the Director of College Planning, Education, and Training at MEFA. And I've been at MEFA for a very long time, and I've been in this field for a very long time, seeing this financial aid process, both from a college perspective, from working for the student loan organization, to the college board, to now MEFA. And I really enjoy my job getting to work with lots of students and families and colleges and high school counselors. And I just like to share as much as I can about this whole process. So thank you for being here with me this evening. A few other logistics. You have control of the audio. So hopefully you can hear me clearly and you can see the screen clearly. If you have questions, use the question and answer, the Q&A section, and just put your question there and I will be sure to get to it as we go along, or more likely a lot of them will get answered at the end if I don't get to cover them throughout the webinar. I think that's probably easiest to put your question in the Q&A. Since I'm here by myself, it's harder if I have to look at chat and Q&A. If you need closed captioning, you can click the live transcript button, the CC, and you'll be able to see the words as I speak them on the screen. And if you need to leave, feel free to leave. Tomorrow, we will be following up with the recording of this webinar, and you'll be able to access the slides as well. So with that, let me tell you a little more about MEFA. So MEFA has been around for 40 years this year, actually, and we were created by the state to help families plan, save, and pay for college. And we're still doing that same thing all these years later. And we have the state's two college savings plans, the U Fund and the U Plan. We also have the Attainable Plan for people with disabilities to save for their expenses as well. And then we have low-cost loans for families who need that type of private loan financing for college. And everything else we do is all about giving free guidance, just like at this webinar. But in many, many ways, we have a blog, and we have videos, and we have our website has a lot of resources. So please stay in touch with MEFA throughout, and we're just happy to help you through this whole process. All right, so this evening, talking about financial aid, we're going to talk about the types and sources of financial aid that are out there. And we're going to talk about the application process that you as a family will do to receive financial aid. And then we'll talk a little bit about how colleges make financial aid decisions and about how families actually end up paying those college bills. And all throughout, we will also share free resources. So one important takeaway, hopefully from this webinar, is to just know there is a lot of help, and don't be sort of at home overwhelmed with this process. Reach out and take advantage of all of the free assistance that is available to you. All right, so now we'll dive right in. And I will just see, okay, I see some questions started. So I'll start going, and I'll probably cover a lot of these, and we'll get to them for sure. So thank you. All right, so what is financial aid? So financial aid is really any money that is going to help your student, or you as the student. I shouldn't assume there are no students here. I think it's terrific if you are a student and you're getting a jump on this. So any money to help the student pay for college. And usually we think of financial aid as three different categories. grants and scholarships, which is free money, the best kind. That's what you really want. Money that is just awarded to the student and the student does not pay back. So best kind of financial aid. But there are a couple of other types. There's something called federal work study. And so you might know what that is. That's just where a student is able to get a job during college and usually work 10 to 12 hours a week, get paid on a weekly or every other week basis, and use that money then for miscellaneous expenses, whether that be shampoo, bus fare, pizza, things like that, all of those types of expenses. So not money that comes up front, but money that is very needed during the year. And then federal student loans are also another source of financial aid or a type of financial aid. And I get a lot of pushback. People ask, why a loan isn't really financial aid? It's a loan. I have to pay it back. And that is true and very important for students to realize that. But when you see this very particular type of loan, which is the federal student loan, these loans have very specific terms that make them a little bit better than other loans for a student. And that's why they're considered financial aid as well. So then let's talk about the sources. Where does this money come from? These grants and scholarships, work study loans. So this money comes really from these four sources. The first being the federal government. The federal government has a lot of aid available, and you can find a lot more detail about that aid on studentaid.gov. But there are lots of federal programs, including those federal student loans that I mentioned. And then Massachusetts has financial aid as well. And so they have scholarships, tuition waivers, and some loans. And you can find out information on the state aid at mass.edu/OSFA, which is Office of Student Financial Aid. Third, the colleges and universities themselves have a whole lot of financial aid, a whole lot of money that they award to students each year. So sometimes that's a source that surprises some families. So it's a lot of money that is awarded from the colleges and universities themselves. Now, let me stop there for a moment, because what you should know is when you apply for financial aid, you're applying for all of the three things I just mentioned: all the federal aid, all of the state aid, and all of the college and university aid at once, just by going through the full financial aid application process. So that's good. And that all that money comes together on an award that the college then will send to you. So that's good to know that it's one process. The type of aid that's outside of that process is this orange rectangle here, other agencies. So there are other scholarships outside of the financial aid process. And that might be a big Coca-Cola Foundation, some big national scholarship, or it might be a scholarship for students in your town or at your high school. So there are just a lot of options that are outside private. And that's a process that students can just look for outside money in addition to going through the financial aid process. And a couple of ways to look for that outside money are, number one, contact your school, your school counselor, and ask, are there scholarships? How do we apply for them? And many times the high school will have a process. Also look in your town, parents' employers, students' employers, anything like that. The story I always tell is that my dentist used to offer a scholarship to good community servants, it said. So keep your eyes open for any additional money like that locally and in your own life, day-to-day life. But also there are scholarship searches that your student can go to online. And we've listed a couple of them here: MEFApathway.org, which is MEFA's free web portal for students to look for scholarships, and has a wealth of other resources too. FastWeb is another one. And on our website, we have a listing of a lot of other online scholarship tools. We also have a webinar about searching for outside scholarships. And if you follow us on social media, we're always talking about scholarships. So that's that. Now, kind of stepping back, I mentioned a moment ago that those federal student loans are considered financial aid, even though they're loans and the student pays them back. Why is that? Well, let's take a look at these bullets. The student is the sole borrower on these loans. So, and they're, a young person with not a whole lot of credit history. There's no credit check done on that, but the student is the sole borrower. So that's a key factor. And these loans can be subsidized or unsubsidized. And subsidized means that the federal government is paying the interest while the student is in college. That's a big deal too. Unsubsidized means it's still the same loan with the same interest rate, but interest is accruing while the student is in college, even though no payment needs to be made. There's usually a low fixed interest rate. Right now, that's 3.734%. That usually changes in the summer. And then another really big benefit is there are lots of repayment options on these loans. So students get to choose either a standard repayment program when they graduate, or they can choose one that is tied to income that allows them to pay a lower amount. They really have a lot of choices, so they can set up a payment plan that works for them. So that's a very nice feature of these loans. Now you can see on the right that the limits of these loans are $5,500 as a freshman, $6,500 as a sophomore, and $7,500 as a junior and a senior. So if a student were to take the maximum of federal student loans as an undergraduate, they would probably graduate with $27,000 worth of debt. And then they could choose their repayment plan, which might be they pay $300 a month for 10 years. That's the standard. Or again, they choose another repayment plan that will allow them to pay a lower amount that they can manage with their income and maybe pay for longer. And you can see the last bullet is a hot topic these days about how these loans also have some very unique deferment, forbearance, and forgiveness opportunities. So in fact, currently, students who had student loans are not making payments on them through the pandemic. And that right now is still on pause, that former students are not making payments until September 1st. So that's a special benefit that wouldn't happen with probably another type of loan, but those students have had that relief during the pandemic. And there are public service loan forgiveness opportunities if students work in not-for-profit organizations. So there are just some unique benefits. So a student would want to really research all of those to see what all of their repayment options are at the time. And we'll see how a lot of this shakes out over the next number of months with other opportunities for students. So then let's talk about how and why is financial aid awarded. And one way that financial aid is awarded is by merit. We're going to talk a lot about the other way, but it's really important to know that there is a lot of merit-based aid available. So what does that mean? That means that colleges each year are tasked with bringing in the best class they can. And they want that class to be academically prepared, a good fit for the school, diverse, lots of talents, lots of diverse talents. And so colleges use merit-based money to attract students they want. So especially students who have really good grades and are at the top of the admissions pool probably stand a good chance to receive some merit-based aid. Merit-based aid can also be awarded for other things besides academics, like sports or music or other talents. So just be aware that type of money is awarded. And here's the thing. This is one reason why it's very nice to have a good group of colleges that a student is applying to, because a student may fall in the top half of the admissions pool at one institution and be eligible for a lot of merit-based aid. At another institution, they might fall in the middle of the pack or even lower than the middle of the pack, even though they're admitted, and maybe be eligible for maybe less merit-based aid. So it's kind of nice to apply to a variety of colleges so that the student has some choices in spring of senior year. What else can I say about merit aid? Just that sometimes students will have to keep a certain grade point average at college to keep the merit aid. So you'll want to ask about that. And that there are some colleges that don't award merit aid. And a good example of that is the Ivy League colleges and colleges that are sort of at that competitive level, those very elite colleges. Some of those colleges award only need-based aid and no merit-based aid, but the majority of colleges do have merit-based aid. So then need-based aid, that is awarded based on your family's financial aid eligibility or need as determined by the information that you put on the financial aid forms that we're going to talk about. And that eligibility is determined by a standard formula, and all those types of aid, grant, loans, work study, can be need-based. And also, although most colleges have merit-based aid, most financial aid is need-based. And many colleges award aid based on both. All right. So now let's talk about the application process. All right, so the timeline. So basically, financial aid applications open up on October 1st of the student's senior year. So keep that in mind, that that's a good time to start applying for financial aid. Now, every college will have a different deadline. So one strategy I used to say to students and parents is look at all of the deadlines and just make sure you apply by the earliest deadline. But now I think the easiest way to say it is to just be prepared to apply for financial aid starting in October. Even the earliest deadlines tend to be November 1st. So if you apply for financial aid early October, you're probably going to meet all of those deadlines. While some financial aid deadlines might be in January, February, or March, if a student is applying early through one of the early admissions processes, early decision, early action, then they probably have a November, maybe December, but probably November deadline. So another reason to really get these applications done in October. You don't want to be late, because as long as you submit them on time, at least you're applying for everything you're eligible for. If you would like to download an application manager to stay organized, we have one on MEFA's website, or you can just use a spreadsheet to keep track of deadlines and all of that. But again, make a plan to do these forms in October. So the main form is the FAFSA, the Free Application for Federal Student Aid. And every student will complete that, and every college requires that. And you would go to fafsa.gov and you can see what it looks like. You can either apply on your computer or you can apply on your phone with the app that is called My Student Aid mobile app. And you can kind of go back and forth between the phone and the computer. It works pretty well. One of the first steps when you go into FAFSA.gov is to create an FSA ID. That's really just a username and a password for the student and a parent. And you will complete the FAFSA. The form has gotten simpler over the years. You probably hear nightmare stories about, these forms, but there's something called the IRS data retrieval tool, which allows you to pull in all your information from your tax return, which makes the process go a lot faster. So if you're eligible to do that, if it shows that option to you, definitely do that. The form must be completed every year. What I will say, and I think the next slide will show it. Yeah, it does. So is that the nice thing about why you can be ready to apply in October is that the tax return you're going to use is the one that's already been completed from the year before. So this year, in October of 2022, you'll be using 2021 income and income tax return. So hopefully that's been done, and it makes it nice and easy to complete these forms. And, don't get me wrong. We know, right? Any forms that you're doing online aren't always, they don't feel easy. Little things come up and you hit the wrong button and then it's confusing. So it's not like it's completely simple, but if you just take your time and read, there's help with every question. And if you get stuck, you save the form, you can call MEFA, and we can help you with completing these. So they're less scary than the reputation they have, but it doesn't mean that things can't go wrong. I am a parent. I've completed a lot of these financial aid forms for my kids. In fact, I have, my daughter has one more year, and even I have had little things go wrong over time. So I'm not trying to make it seem, like it's totally a piece of cake. All right. So what's reported on the FAFSA? Student citizenship status. One little note I'll make: if a student is a U.S. citizen or permanent resident, but parent is not, the way you can complete the form is to just have the parent put zeros in the Social Security number, complete the form as the questions are asked. And the only other difference then is that the parent isn't able to sign the form electronically with that FSA ID. And so instead, you just have to print that signature page, have the parent sign that, and mail the form to the address on the form. So those are the two differences if the parent is not a U.S. citizen. You'll list the colleges that the student is applying to on the form, and you'll list information about parents' marital status. And so any parents who are married, including same-sex parents, all parents who live together, married or not, will be on this form. For divorced and separated parents, it will be the custodial parent and the current spouse. So the parent that the student lives with more during the calendar year. And those are the only parent or parents that will be on this form, and legal guardians are not a parent. You'll also put information about the number in your household and the number of children that will be in college during that year that you're applying for. Also, parent and student income. And so again, I mentioned this, it will be the 2021 income for the 22-23 academic year. We span many years in this process, both taxed and untaxed income. And then parent and student assets. So savings, checking, investments, other property, 529 plans. But here are some assets that will not be included on the FAFSA: your primary home, the value of your retirement assets, life insurance, and the value of a small family business with under 100 employees. And then there really isn't a place in the FAFSA to report debt, except as it's related to a reported asset. So then, before I move on, the other financial aid application that some institutions will also require, in addition to the FAFSA, is the CSS Profile. So that's a form of the College Board, and you can find that at cssprofile.org. And that's required along with the FAFSA for some colleges and universities. And it's usually colleges and universities that have a lot of their own institutional money to award. And they just find that the FAFSA doesn't give all the information that they need. So things like, it doesn't ask about your home. It doesn't have the non-custodial parent on there. So there are a few things like that that are not on the FAFSA, and that's why the colleges want this additional form. This form can cost a fee, If parents earn under $100,000, then there's no fee for this form. But if not, there could be a fee of $25 for the first school and $16 for each additional college. But it is well worth it because, again, the colleges that require this form have a lot of institutional money that they're awarding. This form is also available by October 1st. And if it's a divorced or separated family, it's completed the same way. The custodial parent and the student complete the CSS profile, but the non-custodial parent, the other parent, also goes and completes their own non-custodial profile. The two are never seen, it's all private, but the college will get that other information. I should mention MEFA has very specific webinars on the FAFSA and on the CSS profile in the fall, so you can come back and watch those as well. And some colleges have their own financial aid application, so just look out for that. I see that less and less, but college websites are a great resource, and just look in the financial aid section what forms are required, and if they have a form that you need to download and complete, do that as well. I'm just going to scan the questions. I think I'm going to be covering a lot, but if there's a question related to something I've said, I want to be able to catch it. So there is a question here. Does my former spouse have to file a FAFSA and or CSS profile? So I'm glad you're asking. They do not have to file a FAFSA, but if a college that your son or daughter is applying to requires the CSS profile, then that former spouse will fill out that non-custodial profile. And we'll get to the loan process. Someone has a loan process question. I don't understand this other question, so maybe you can ask it again in a different way. If a student is attending a Massachusetts school, what's the question there? The FAFSA looks the same, the CSS profile looks the same for all schools, but ask that question. I may not be understanding that correctly. And then here, this is a great question. Are there scholarships for the students to apply to, or can the parents sign up for the students? So I think you should have your student go and do this work. Of course, we're parents, we're going to help our students along with this whole process, but the students really need to take some initiative. Once they get to college, they're going to be on their own. They're going to have to be used to doing some of these things on their own. So it would be great to get them to do a few of these tasks, and applying for scholarships or signing up for some of those scholarship websites is a great task for the students to do. But I know we want to help our students, and we should be supportive, but let's have the students do some of this. So great. And here's another great question about divorced separated parents. Yes, it is so confusing. So the way it works is, it's the custodial parent. Now, that's the definition of that, and I'm going to put that in quotes, right? Is the parent that the student lived with more in the last calendar year. For many situations these days, there's a 50-50 split. The students, live with both parents, go back and forth with parents, and it is very difficult to know, did they live with one family one night more than the other? I mean, it gets confusing. So the way you start is, if it's clear that the student lived with one parent more, then that's the custodial parent. If that's equal, then the parent who provided more financial support, that's the second criteria. If that's equal, which I know it is equal many times, then you just pick a parent. Pick a parent to be the custodial parent, but you really want to pick that parent to be the custodial parent for the whole college process. So think that through. And then it's just that custodial parent's finances that are used on the FAFSA, and the other parent does not submit a FAFSA. But then, for CSS Profile, both may be asked for. That's a great question. And someone asked about the that 3.734 interest rate for the federal student loans. That is fixed. And that when a student borrows a loan at that rate, it is fixed for the life of the loan. Now, the next year, the interest rate may go up and the student borrows that loan at that interest rate, but it's fixed for the life of the loan. So at least you and the student know what the interest rate is on the loan that you are borrowing. And someone's asking about copies of the forms, FAFSA and CSS Profile. If you go to those websites, you can see sometimes examples of what the FAFSA looks like, what the CSS Profile looks like, and download some of the questions. So I think you can get a pretty good sense of what's asked for on the form by going to those websites. All right, I'm just going to take one more and I'm going to keep moving along. Okay, I think I did explain about the divorced and separated families. All right, CSS Profile doesn't have, they have their own way of logging in. You do have to create a username. It's nice and easy if the student does have a College Board account, maybe from taking the PSAT or SAT, that you can start by using the student's account and then go in, and the parents can set up their own username and password, but it's not exactly like the FSA ID. So the FAFSA will have the FSA ID, and the CSS Profile will also have a way of logging in. But again, start with the student account if you can. All right, so I'm going to stop for a moment and keep going. All right, so then let's say, you get all this done nice and early in October, you sit back, and after you apply, what happens? So the colleges and the state receive that information electronically. And then you as a family will receive the student aid report from the FAFSA and a CSS acknowledgement from the CSS Profile, so that you can look through, make sure you didn't make any errors. If you did, you can go back in and correct them. And then it will also give you follow-up information, especially on the CSS Profile, of anything else you need to do. I've found it pretty useful on the FAFSA. They ask for your email as a parent, your email as a student. Use email addresses that you're going to have, hopefully for a long time. And what I have found useful the last couple of years is they're very good at letting you know your FAFSA was accepted by the processor. Your all of your data is, at the schools and has been delivered to the following schools, and they give you a list. So you have a good sense of when your information is being processed. And in fact, one question people ask a lot is, you can put 10 schools on the FAFSA. Well, what if your student is applying to 12? Well, you put 10 schools, you send it off. And then once you get that student aid report, maybe 5 days later, that says your information has been sent to these 10 schools, then that information is there. You can take a couple of schools off and put a couple more on so that you can send your information to those additional 2 schools. But just wait till you get that student aid report or acknowledgement to know that everything's processed. If you have information, you finish your forms and you think, these forms don't show our unique circumstances as a family. There's stuff that I wasn't able to put in there. You could always write an email to the financial aid office with special circumstances. The CSS Profile actually does have space to write in about special circumstances, but the FAFSA does not. And then just know, once you apply for financial aid to a school, be aware that they may be in touch with you to follow up with additional questions. And so just be sure to answer any of those. So there's something called federal verification. They might randomly ask you to verify that the student has a sibling at another college, and you'll have to just sign off that yes, they do. Or one of the other verification pieces I remember receiving was that I had to verify that my student did not need to file a tax return because she earned less than the required amount. And I just have to sign that and send that form in. So then the colleges will review all of the applications and start determining the financial aid award for your student. Oh, and this is more about verification and the types of information they may come back and request from you. They may request a tax return. There may be a process for doing that, and they will tell you all of that. So let's talk about the financial aid office for a moment. Once you apply for financial aid at an institution, the financial aid office is really your best source of information because they know all of the very school specific details. So some things you might want to ask at some point over the process are, what is the renewability of financial aid? If my student receives this financial aid offer, will we receive that for the next 4 years? You might want to ask about if you bring in a private scholarship, does that have any effect on financial aid? And there are going to be some changes in the 24-25 academic year, which is not what you'll be applying for in 2022, but the following year. And colleges will start to tell you about that. So it's all about you understanding when the student says, yes, I'm going to attend this college, you understanding what that financial aid looks like and how it's probably going to look in the subsequent years. Also, if you apply for financial aid in October, and by the time the student needs to make a decision in May, anything has changed in your financial circumstances, you should definitely be in touch with the financial aid office and let them know any of that. And let them know if you want to appeal the offer. And we have a webinar on the MEFA website about appeals, about how to do an appeal. And we have some experts at different colleges who presented on that webinar. So check that out as well. And then look on the college website on the financial aid page and find out how the financial aid office likes to be contacted. Is it by phone, email? Do they offer chat? They'll all have their own ways and sometimes multiple ways to do that. All right, so now we'll get to how financial aid decisions are made, but I'm going to quickly look at the questions again just to see if there's anything else I should cover before we move along. All right, so someone asked about, do the parent and student have to file the FAFSA? Yes, you file that together. And someone asked also about 529 plans. Where did they fit into this process? And they are just a parent asset. So that's where you would list your 529 plans. And as such, they are considered very reasonably in the financial aid process. So we'll get to that. But as a parent asset, about 5% of the full assets are considered in this financial aid process. So somewhat reasonable compared to other pieces of your financial situation. And then, yes, someone else who is divorced from the parent of their child and now remarried, and so has a step parent. Yeah, it is the custodial parent, and if remarried, that family that will be applying on the FAFSA. So I know that nobody likes to hear that, but that is the information that will be listed on the FAFSA. Yeah, and then someone asked about mass state aid. But if students attend an out-of-state college, they probably will not be eligible for mass state aid, although there sometimes are reciprocity programs. But in general, the mass state aid covers the mass colleges. So that's a great point. And although they probably wouldn't be eligible for out-of-state state aid, out-of-state colleges many times have aid for students from other states. They like to bring students across state lines. And so someone asked about a parent who passed away. And so, a mother could just fill out the form as a single person, and you'll list the status of the one parent right at the beginning of the application. So that will definitely be taken into consideration. Another question that's about reporting assets. Someone who owns a 2-family and lives in one and rents out the other apartment. So you don't need to report the part that you live in. You would only need to report the other part as an investment property. So you kind of just do report half of the asset and half of any debt on that. And finally, there's no specific deadline for the FAFSA application. It's the school's deadlines you should pay attention to. So look on the college websites to find out their financial aid deadlines. But again, if you apply in October, you should meet all of those deadlines. And yeah, another question about that, a parent who's remarried, and how that whole family's situation gets passed along. All of the other pieces are taken into consideration, like the other children that the other step parent supports. So a lot is taken into consideration, especially if you apply using the CSS profile, but it is asked about. So you do need to report that. Okay, and now I'm gonna move along. All right, so how are financial aid decisions made? All right, so every college each year comes up with what's called a cost of attendance. And that is the total cost that it is for a student to be there at the college for the year, including tuition and fees, room and board, books, supplies, transportation, those personal expenses. So you can see some of those expenses are billed, like you'll receive a bill for the tuition and fees and the room and board, and some are not billed, but are real expenses that the student will have as a student. So all of that is the cost of attendance, and the college comes up with what their own cost of attendance is, which is a key number. And then from the information that you put on the financial aid forms, that information is looked at, and the number that comes out at the bottom of the formula is your expected family contribution. And that means that's the amount that it's expected that you can contribute toward that cost of attendance, you as a family. And I will say it's not an amount that anyone, the federal government, the state, the colleges, any of us think that is an amount that you have under the mattress or ready to write a check. It's more, what can your family absorb in educational costs compared to all of the other families? And that's what that number is. And that's why that expected family contribution number always feels pretty high for a family. If it's not zero, and it can be zero, a family with a zero expected family contribution, it would just mean that their income and assets don't leave even a penny to be spent toward college education. It's really all taken up in other living. But then if it's not zero, that expected family contribution always feels like a stretch for families. So just know that, and that you'll pay for that in a number of ways. Again, not just that there's any expectation, you can just write a check for that. So then that cost of attendance minus your expected family contribution, as determined by the financial aid forms, is your financial aid eligibility. And then colleges have the task of awarding a financial aid offer to hopefully meet that financial aid eligibility or come as close to it as they can. So this is kind of an example of, let's say here's a college that costs $45,000. And how does a college put together a financial aid offer for this family? Well, first they might say, okay, well, this family's expected family contribution is $5,000. And then we're going to give a grant and a scholarship for $17,500 and $10,000. Maybe one's merit-based, one's need-based. We're going to give that federal student loan a work study award. And that's really all we have. That's really all we can afford as a college. So they didn't really meet that full $45,000, but they came pretty close. And so now you as a family would be responsible for the expected family contribution and that unmet need at the top to send the student to college there. Now, there are some colleges that promise to meet 100% of the full need of all of their students. And if they do that, they will tell you that right on the front page of their financial aid section of their website, because that's terrific. A lot of the Ivy League colleges do that, and a lot of the schools like that have a lot of resources will meet the full need. They still may give the student a loan, may or may not give work study, but they will meet the full need with either grant, scholarship, loans, work study, or a combination. And so that's a great thing. But many other colleges are not able to meet the full need, and again, they do their best. So when you're looking at colleges and helping your student pick a variety of colleges that they really can see themselves fitting in at academically, socially, geographically, you might want to have a sense of the financial piece up front. Not that you want the student to not apply to a college, because you won't know exactly what the financial aid offer is until you get that financial aid offer. But ahead of time, you might just want to have an idea. So all colleges have something called a net price calculator on their website, where you can go in and fill in information as you will on a financial aid form. And it will actually show you an estimate of a financial aid offer that you might be able to receive from that college based on your information. So this is a nice way to just have a sense of the type of aid that different colleges may award to you. And I never used this with my children as a way to say, don't apply to that college, but I certainly did use it to say, I just did the financial aid, the net price calculator on a certain college's website, and it looks like they didn't give a whole lot of financial aid. Why don't you look and add another college to your list that you like, that maybe might give you a little more financial aid. Maybe one where you'd fall really high in the admissions pool and you'd receive a merit award or something like that. So just really to ensure that your student is going to have options and choices in that spring of senior year. So this can just be used as a tool in your toolbox. And then this is a really important slide, because this is probably common. You will see this next year. When you start receiving financial aid offers from the different colleges, what you're going to see is that they can all look very different. You're one family, your student is one student, and you'll receive offers that are all over the place. And that's because some colleges have more resources than others. It's also because some colleges use merit to attract the students they really want, who are a good fit for their institution. And the academics weigh in there. So this will be common in your household next year. So let's take a look at these awards from 3 colleges. Okay, so colleges A, B, and C. College A is one of those colleges that meets full need. So all these colleges, for the example, the cost of attendance is $45,000. Your expected family contribution in the example is $5,000. And so eligibility for financial aid is $40,000. And College A met that $40,000 with grant and scholarship, loan, and work study. And again, you will see this. College B also gave a very nice aid offer, but they left some unmet need of $7,000 at the bottom. So they were not able to meet the full need. And College C, while still giving some scholarship, student loans, and work study, they actually left $15,000 unmet need. So, the ideal would be that your student would say, I love college A, that's where I want to go. Sometimes we're parents, we know how these things work out. Sometimes your student will say, but I really like college C, that's my favorite. And you will have to sit down as a family and really talk about the differences between A and B and C. Hopefully go back and talk to the colleges, ask more questions, maybe attend some open houses, maybe even ask for some more money to just say, college C, this is my student's first choice, but that doesn't seem to be an affordable choice for us. Is there any way you can give us anything additional? So there are all kinds of ways to think through that, but sometimes these are very hard conversations with your student to try to make the decision that's going to be the best overall decision for the student, for you as parents, all of that. And just another sort of warning, something to watch for is here are 3 colleges that are all giving aid offers that look like they're giving you $35,000, but they're not. As you can see, a couple of the colleges gave a work study offer. College C did not. And colleges B and C here put something called a parent loan in there. And that isn't financial aid. That's letting you know that you can possibly borrow a parent loan. But just make sure you look at the different components of the aid in all of the different colleges so that you're comparing apples to apples. And MEFA actually has a tool on our website, college cost comparison tool, to help you do that so you can compare apples to apples. And you may need to borrow a parent loan, but that's your choice. You really want to know what the bottom line is, and then you can make a decision about how you're going to pay for that. So now we'll talk about the paying for piece. I'm just going to look at the questions again a little bit and see if there's anything else that I need to cover first. This is a great question. Is it possible that your school would provide more aid than the total eligibility? Could your expected family contribution be 10,000, but the total aid package ends up that you only have to contribute 5? Probably not. And I'll tell you why. Because anytime any federal source of money and state source of money is involved, then you cannot go over that cost of attendance minus EFC and aid eligibility. You can't go over that aid eligibility with federal or state money. So even if there's $1 of federal state money or state money, so it probably wouldn't happen unless it was a completely institutional financial aid offer, which is rare. Great question. So a question about 529 plans, and lots of misconceptions around that, but no, the 529 plans that are in a parent's name are considered a parent asset on the FAFSA, and about 5% of the total is taken toward the expected family contribution. So quickly, if you have $100,000 in a 529 plan, 5,600 would be the jump to your expected family contribution. You'd be expected to pay 5,600 more than whatever your expected family contribution was without that. So that is how 529 plans work in a very good way. And then that's it. There's no reporting future years, anything like that. It's just treated as a parent asset in the calculation toward your expected family contribution. In the past, grandparent owned 529 plans had some of that you might be talking about trying to figure out when you're going to use the funds. That's going away. And so if you have further questions on that, feel free to connect with MEFA on that, and we can let you know about that. But really, either way, you're going to be dealing with the asset and it treated as an asset, and the grandparent funds not being counted at all. And if you appeal, does that affect your acceptance to the college at all? Absolutely not. And I know I hear this question a lot. None of us want to ask for something, and it feels funny to us sometimes, but absolutely not. College financial aid offices get a lot of calls, a lot of emails, a lot of requests. If you have a request, you can always ask, and feel free to do so. I mean, manage your expectations, because sometimes you might get an answer that says, I'm sorry, we really went out with the best award we could. But always feel free to ask, and that will not affect your son or daughter's admission nor reception when they get to college or anything like that. Now, if you inherit money, is that counted on the FAFSA? Well, the FAFSA is counting your assets. So when you inherit money, you'll probably put it somewhere. And if it's in your cash, savings, or checking or something like that, then it does get counted. Retirement accounts are not counted on the FAFSA. So that's something to know. So it depends on how you use it. If you use it to pay down your mortgage or something, that isn't quite just sitting in a bank account, and on the FAFSA, that might not be counted. So it's really about the asset and how it's counted. And Coverdell plans are pretty much treated the same as 529 plans, yes. And if the student doesn't know all the colleges they're applying to in October, when they do the forms, can you add one later? Absolutely. So you can complete the FAFSA, do the hard work on October 10th, and then most of it's done. And then if the student decides to apply to a few more schools, you can just go in and add schools to the FAFSA and then have the information sent to them. And that's a lot easier than starting the form from scratch at a later point. So that's great. And I'm going to get to some of these questions I think are going to come up in the next section. I'll get to this one more though. I have 3 529 accounts. Do I just list the one account on the FAFSA form for each child and not the aggregate? Because you are the parent and you own them, you have to list all your 529 plans, just as you would list another investment. But it can still work out well for you, because parent assets are treated at that 5.6% rate. Whereas if it were an asset in the student's name, it's treated at a 20% rate. So that won't be treated in the student's name. You just put the lump sum of your 529 plans. And I think that covers this next question too. Yeah, you list all of the 529 plans where you're the owner, even if there are different beneficiaries. All right, and now I'm going to save the last few good questions because they fit more into this section, in the paying for college section. All right, so let's take a look. Now the student, let's say, has chosen a college. You've sat down, you've figured out a great choice, somewhat affordable, or you're going to check out the affordability now, I guess, is where you are. So let's say you look at the cost, you look at the financial aid, and it appears that the balance due that you're going to owe is going to be $20,000. So that's kind of like this one, right? That would be like your child going to college C here and leaving you with some unmet need and the expected family contribution, and you having to come up with 20. So, wow, how do you do that? And is that affordable? So the first thing I want to say is that you may decide that isn't affordable. And that's, again, when you sit down with your student and you start to look at, what are the other options here? How are we going to find a great choice for you that's also affordable? And I'm going to show you a few websites you can look at, things like going to a community college for 2 years and then transferring to a 4-year college, or deciding to commute. There are all kinds of ways you can lower the cost possibly. So you may have to do that at this point. But let's say you think, all right, we don't. I think we can afford this. Let's figure out how we're going to pay. So I bet every single person on this call will do this a little bit differently, or would do this a little bit differently in this circumstance, because I've helped tens of thousands of people, and everyone pieces this together in their own way. And most people piece it together with all of these, in all of these ways over the 4 years, or if you have multiple children. So this is how one family might meet that $20,000 balance. One family might say, okay, well, we have some student savings. The student has worked summer jobs the past couple of years, and the student has $1,000. So we're going to use $1,000 of student savings. And we have a 529 plan, and we feel comfortable using 4,000 of it this year. So we're going to use that. And then every college has something called a monthly payment plan that allows you to, it's not a loan, but for a small fee, it allows you to just spread out the cost and pay over a number of months. And so let's say you as a family, or this family here, they just paid off a car payment, and now they have $500 extra per month. So they say, all right, we're going to join the monthly payment plan and pay $500 a month for 10 months. And that's going to be $5,000. So they'll do that. And that's a way, because there's no interest, that's a way of keeping any loan debt down. But then this family says, that's what we're comfortable with. And so we still are going to need to borrow another loan. So we're going to borrow an education loan. And we're going to borrow one for $10,000. And roughly the payment on that, I mean, it depends on so many factors, right? An interest rate, but it'll be around $100 a month, probably, on a $10,000 education loan. So the family might say, that's doable, we can do that. But of course, there are a lot of things to think about, and to think about, it's not just for 1 year. Can you sustain that and borrow an education loan, for the 4 years? So lots to think about, but this is an example of how one family might pull that together. And that education loan could be a number of things. That's not the federal student loans. That's on top of them. That's a private loan that the family might borrow through the federal government, might borrow through an entity like MEFA, might borrow through your bank that you work with. And you can go to your college and ask, where students borrow for these, where parents can borrow to help for these additional funds. And usually it's parent and student together. Students need a co-signer on loans like this. So then you will really do your research to pick out the best loan option for yourself. And here are the conversations that have to happen at your kitchen table. Could you start at a community college, get all your prerequisites out of the way, save significant dollars, and then transfer? Parents, do you have other children that you'll need to support in the future? So you have to worry about the loan debt you might take on for this one student. And again, students and parents, think about, this is not a 1-year proposal. This is a 4-year or maybe more proposal. And students also, although many, many students don't know exactly what they'll do and what their career will be and job after college. But if they do have an idea, it's good to factor that in and think about that. So for example, I always pick on the engineers. There are a few engineering schools here in Massachusetts that, show right on their website that their graduates graduate with salaries above $80,000 upon graduation. And so if a student is a hardworking student, gets into a college like that, they plan to be an engineer, and the college shows that those are what the typical salaries are like, that student might think, I can take on a little extra loan debt because I think I'll be able to pay that off. You never know, but everything points toward that being a good possibility. Versus, what about a student who's thinking, wow, I'm going to get my 4-year degree and everyone in my field needs a master's degree, so I'm going to be going to graduate school right away. That might be a reason to think, I really don't want to take on extra debt because I really am going to have to take on more in graduate school perhaps, and then I'm not going to be earning right after college. And so if a student knows some of those things, those can be factored in. Also, other than those federal student loans to the federal government, all other loans are going to require a credit check. So people have to know that they have a decent credit score. And I think I'll move on from there. So here are a couple of those options that would be just good to look at now of ways to keep college costs down. So here in Massachusetts, we have a program or a number of programs under the term of mass transfer, and you can see the website there. And those are all the ways that students can go to a 2-year college and then transfer to a Massachusetts 4-year public. And depending on which program you're in, you can get all of your credits transferred, you can get a tuition credit, you can get freezes on tuition, automatic admission sometimes to the 4-year, depending on your grades. So there are just lots of options there to really get a very affordable education here in Massachusetts. And the second one is tuition break, and that's through the New England Board of Higher Education. And that's that students can attend public institutions in neighboring states. And if they apply to certain programs and attend certain programs, they can actually pay Massachusetts in-state tuition, even though they're going out of state. And there is a long list of programs that apply here, so worth taking a look at in case your student is interested in any of those programs. All right, so I guess I'll go through the end of this and then I'll take your questions. Let's see the free resources I can share. When you're completing the FAFSA, you can always call MEFA in the fall. And we are also partnered with an organization in Massachusetts called FAFSA Day. And so you can go to that website and find out about events that are free where you can go. They've been on Zoom the last couple of years. They may still be on Zoom or maybe a couple in person, where you can go and have experts help you complete the FAFSA on the computer right there. And then educational opportunity centers like Mass EdCo also offer free financial aid help, especially in other languages and unique circumstances. So you can always go there as well. And then this is a kind of a timeline that you can look to about, you're nice and early now. You want to spend this spring and summer researching your colleges, maybe visiting some colleges, doing some online college fairs, asking the teachers for your letters of recommendation, possibly taking the SAT or ACT, and start drafts of your college essay. And then in the fall, you may have to do some testing again, securing those letters of recommendation. And you've already attended MEFA's college financing webinar, but maybe you want to attend another one about the CSS profile in particular or something like that, and completing those applications. And then in the winter, you want to make sure you finish off any admissions applications, financial aid applications. You can apply for those private scholarships. And in the spring, you will start to receive your awards, if not before then, and compare them. MEFA has another program called, How to Pay for College, where we get into the later parts of this seminar, and we can talk more about that. And you'll choose a college by May 1st. So you can go to that FAFSA website and sign up and get an FSA ID for the student and parent. Just make sure you write it down, keep it in a safe place so that you have it. And that ID stays with both parent and student over a long period of time. So keep those in a safe place. Research as you're researching colleges, make note of deadlines, stay in touch with MEFA, and attend, whatever other helpful seminars and webinars we have, and stay in touch with us on social media too, especially because of all the scholarship information. And you can always call us, email us with questions. So now I'm going to go back to those questions. I know we have had some good ones there. All right. So the loan process, once you've decided to take out a loan. Great. So once you decide, as we showed you here, let me go back. Let's say you decide that in order to pay, you're going to take out an education loan. So you're going to do your research. You're going to look to all those places I mentioned. The federal government has the Federal Plus loan. MEFA has great loan options. Your private banks that you work with the college might have some recommendations, and you're going to look and see right around this time next year, what's my best option, and then you will apply for that private loan. So once you apply for that private loan, you apply for it for the whole year. So you really, it's nice when you have your bill, you have your financial aid, and you can really see, okay, this is the amount I need. This is the balance. I'm going to need $10,000 for the year. And then you apply for the $10,000, and then the $10,000 is usually applied half in the fall and half in the spring. And interest does begin to accrue on any private loan, but sometimes you don't have to make a payment until the entire loan is dispersed. So maybe in February of the freshman year. So that's how that works. Let me know if that didn't answer all your questions there. So a question here, what's the difference between the EFC and the parent loan? Well, the EFC is your expected family contribution. And so you decide how you're going to pay your expected family contribution. So again, in this case, oh, sorry. So in this case, the expected family contribution might have been 5, but the college didn't give you enough financial aid. So your balance due is 20. But you're not necessarily borrowing 20,000 in a loan either. You decide how you're going to pay your balance due. And again, you might use some savings. You might join a payment plan. You might borrow a loan for some. Maybe you have a relative who can give you a gift. So that's what that is. The EFC is the amount that it's determined by the FAFSA and the profile that you can pay. Sometimes that's the same as the balance due, and sometimes it isn't. And then your balance due, you get to pay in whatever way you want. Get to, as if it's a gift. And you can always contact MEFA directly for guidance and questions. In fact, let me get us right to that page and leave it there. Absolutely. Through the whole process, we want to help you. All right, let's see what other questions. Great question. Is there an income limit on the parent's income on the FAFSA? No, there isn't. Because, if you have high income and your student is commuting to a relatively inexpensive college, that might mean that you won't get a lot of financial aid. But you can apply anyway. But if your student is going to live at a very expensive college, even parents with high income still can receive, their student can receive some financial aid. Because again, let's say the college you're applying to costs $75,000 and your expected family contribution is high and is something like $65,000, which is a high expected family contribution. Your student is still eligible for $10,000 in financial aid there. So there really isn't a limit. It depends on the cost of the college. It depends on some other factors in your family too. Do you have a lot of children? Do you have a couple of children in college at once? All kinds of things like that. No limit. This is great. So let's say you have one student going to college, but a couple of years from now, you're going to have another student going to college. How can you talk that over with the college to be able to understand it might seem affordable now. Will it continue to be affordable when you're going to be paying for the other student? Each college will take care of their own student, so to speak. But if that is the situation, you can have a conversation with the college ahead of time to say, how will my financial aid change, if it will, once I have another student in college, or will it not change? Just so that you will have a good sense of how the 4 years are going to go. So feel free to have those conversations upfront with the financial aid office. So when is the best time to apply for a MEFA loan? Well, you can apply. Our application process is open now. So you can apply now, and then you'll see the interest rates. The interest rates may be changing this summer. So it's not too early to apply. The only caveat I would give is you really want to understand what your bill is going to be and how much of a loan you want to take out. That's the one reason sometimes families wait until June or July when they receive their bill. But if you have a good understanding of what the bill will be and what you'll need, you can apply now. So the payment plan at the college, yes, it can be any amount. So you can talk with the college, and whatever your bill is, you can spread the cost of that out over whatever their payment plan allows, 9 months, 10 months, 11 months, 12 months. So check that out with the college. College payment plans differ from college to college, even though they all operate similarly. So check that out with the college, and the college will let you break up the payment into monthly installments. So if the student has a part-time job, but contributes to a retirement fund, so the income from the year in question, in this case, it would be 2021, the income gets counted on the FAFSA, but the amount in the retirement fund doesn't, if that makes sense. So deadline for MEFA loans for 2022. I think you mean right now. If so I would say would be your student's last day of attendance for spring semester. So if that's May 31st or June 6th or whatever the last day of attendance for spring semester is. I think that's what you mean, but ask again if that isn't. All right, let's see what other questions I have here. Please define retirement versus investment. So any qualified retirement plan, which is like a 401k, a 403b, all of those plans that are specifically for retirement are retirement investments that do not get included on the FAFSA. So there are plans that are specifically for retirement. Those don't get counted. And would the value of your child's bank account count toward their application? It would. So the FAFSA and Profile also collect student assets, and whatever is in the student's bank account would get counted, and student assets get counted at a rate of 20%. So let me ask this question out loud. Okay, so I understand that the financial aid award is usually sent with or close to your admissions letter, and that's true because they know you need this information. Since students haven't graduated yet, and say the student receives a certain amount of scholarship from the school, does the school send the scholarship funds directly to the college? Does the scholarship lower the expected family contribution? Okay, this is great. So I think you're saying the student's receiving a high school award. So what you can do is when you accept a financial aid offer, you sign something that says you will report any additional scholarship dollars that you won. So you can do that. And how most colleges treat that is, I'm going to take you back to this page right here, because I think I can show it best here. So how most colleges would treat that is, let's say a student wins a $5,000 scholarship from the high school. Then you have to report that and tell the college, my son or daughter is bringing $5,000. And let's say the student is going to college C. Well, that's fine, that you have $15,000 unmet need. Actually, let's say the student is going to college B. You have $7,000 unmet need. Great, bring that $5,000 scholarship. You're all set. But let's say your student is going to college A and you have 0 unmet need. Your total need has been met. How does that student bring that $5,000? Because as I said, you can't go over this college cost of attendance. So what you would say to college A is, my student is bringing a scholarship of $5,000. We would like to not take $5,000 of the student loan in this first year. And most colleges I know would say that's fine. They would let you reduce the student loan and or the work study first and still bring in your outside scholarship. Now, let's say, let me do my math here. Let's say your student was bringing in a $10,000 scholarship and trying to bring that into college A. Then what college A might say is, okay, we'll take away the student loan and the work study, but that only totals $7,500. So we may have to reduce this grant by $2,500 to allow you to bring that $10,000 scholarship in. And while that would be not a great answer for you, that would only be in that unique situation where the student had an award offer meeting full need and the student was receiving a pretty good outside scholarship. That doesn't happen all that often, but if it does happen, you just have to work that out with the college and first let them take away the loan and the work study before they ever touch your scholarship. All right, I'm going to put the telephone number up one more time, and I'm going to look at these last couple of questions. You really can't avoid that student income. Student assets are treated, at a rate of 20%. So they will affect, that could change the EFC a little bit there. And I think we answered this one. I'm just going to look in the chat to see if there's anything else. I see some friends. Thank you. Yes, permanent residents are eligible just like US citizens for everything. And then someone else asked, what is the best way to know if a school is need blind? So most colleges will tell you that, again, on that college website on their financial aid page. They will tell you we meet 100% of full need, or we have a need blind admissions policy. So most of the time they will tell you that. And need blind means that the college admissions office knows nothing about your finances and never knows. They just admit the student or don't admit the student based on admissions factors. Some colleges, most colleges are basically need blind, but some colleges have now become sort of what they call need sensitive or need aware, meaning that when it comes to the end of the admissions pool or the wait list or things like that, they do have to take into consideration a family's finances and how much financial aid they're going to need. So for example, sometimes on an admissions wait list, a family that can pay in full, that student might be taken above a family that needs a lot of financial aid, just because at that point on the wait list, a lot of the financial aid has been awarded already. So that's kind of the downside of the need aware, need sensitive. But again, colleges are pretty open with that. And the FAFSA does need to be completed every year that the student is in college. I'd say October, you do that before freshman year, and in subsequent years, you can usually do that a little bit later in the year. So I think that covers most of the questions. And I do see two more. Let me do these last two. So, because this is a great question too. If we're going to do a monthly payment plan, should we borrow a loan on a monthly basis? And I think you're almost saying to pay that monthly payment plan. I think for the most part, if you're going to do one, it's probably better in this case to do one or the other. So if you need to borrow the money, just borrow the money and have it sent to the school in the fall and the spring. That's probably the way to go here. I think it wouldn't make sense to borrow to be doing the monthly payment plan, because then you're paying for a loan and paying a fee for the monthly payment plan where you don't need to do that. So I'd choose one way or the other. Or you could join the monthly payment plan to pay part of it and then borrow a loan for the balance. MEFA can help you calculate that too. Again, we have these calculators on our website to help you figure out what you would need in a loan and how to minimize that loan by using a monthly payment plan. And if the student is the active beneficiary of a retirement account, does that constitute a student asset? I have to think about that. The person who asked this question, why don't you be in touch? You can see right here, collegeplanning@mefa.org, because I'd have to know more about that account to be able to answer that. But in general, I think not, because retirement accounts are not counted in this financial aid process. So I want to say no, but I guess I need to know a little bit more about the uniqueness of what you're asking. All right, well, thank you for those wonderful questions, and keep them coming. Good luck with all of this. I'm glad you're starting early on this, and stay in touch with MEFA, and hopefully we can be a help to you throughout the whole process. Thank you and good night.